Good morning and welcome to the Killik & Co market update. Volkswagen shares have done really well over the last couple of weeks because the company has published more detail about its ambitious plans in electrification. Here's the chart over the last 2 years. Volkswagen has two types of shares, preference and ordinary shares. The preference shares are actually more liquid, so that's what we've shown on the share price chart here, but the two types of shares tend to track each other fairly closely. Volkswagen shares previously hit a high back in 2015, but then that emissions scandal happened and the shares lost over 50% of their value. They've recovered fairly well since then, and following the spike that's taken place over the last couple of weeks, they're now not too far from that previous record high. Previously, Volkswagen has said that it planned to develop 75 new models of electric vehicle and to sell 26 million vehicles by the year 2029. This year, the company has published an update and it said that it expects to sell 1 million electric or hybrid vehicles in this year alone, and also that it plans to open or build 6 new battery factories in Europe by the year 2030. So the market has reacted really well to that news, but also the shares have probably benefited from this recent rotation out of growth stocks and into more cheaply valued stocks that we've seen over the last couple of weeks. This chart here shows Volkswagen and Tesla over the last 3 months, and as you can see, Tesla shares are down, but Volkswagen shares are up over 45%. The contents of the UK inflation basket are adjusted once a year so we can make sure that our inflation data is based on products and services that people are actually buying. So the latest changes were announced this week, and they did give an interesting reflection of changes that have happened in our lives because of lockdown and the pandemic. So we've got 4 quite notable additions to our inflation basket. The first one is hand sanitizer, so that implies that we are expected to have a higher focus on hygiene even when lockdown is lifted. What's quite interesting is that masks were not included in the inflation basket, and that apparently is because the committee that puts this basket together does not expect people to continue buying masks to the same extent once they stop becoming compulsory. Electric vehicles were also added, so that implies that these are no longer a niche product and that they have become more mainstream. Smartwatches were also added, and also loungewear, which implies that people are expected to continue spending more time at home even when lockdown is lifted. The latest UK government borrowing figures are in, and unsurprisingly the numbers are very high, coming in at over £19 billion for the month of February. This chart here shows the UK's public sector net debt as a percentage of UK GDP, and the data goes back over 100 years. So what you can see here is that our debt was very high around the time of the Second World War, then it fell quite heavily, and then it rose again following the financial crisis, and that pink bar at the end is our data for the month of February alone, so you can see that it has spiked again as a result of the coronavirus. What's quite interesting is to think of this in the context of the last budget, which was announced by Rishi Sunak on the 3rd of March. Instead of trying to actively reduce borrowing, what he's trying to do is focus on growth. So he's trying to grow our GDP, and if he's successful, then our debt as a percentage of our GDP will be a less high number. Now moving on to have a look at next week, we've got results out from Eon and from Tencent. That's it from us. Enjoy the weekend, and we'll see you next Friday.